Thank you. Hi, good afternoon. I hope everybody's doing well today. My name is Teresa Noble, and as Erika said, I am from Blue Chip Federal Credit Union. I'm here today to talk to you about finances. Heard that it's a good idea to start something like this with a joke, but I'll be honest with you, my sons say I'm not a funny person, so I thought that, I would save you the torment of a bad joke. Sometimes life can be a struggle. Now, I don't know about you, but when I was in high school, they didn't offer a course on finances. I'm pretty sure that most schools didn't. I remember my mom trying to teach me how to balance my checkbook once I had started working and telling me that I needed to save money, even telling me I needed to open a Christmas account so I would have money for that. I have to admit that I was not the best financial student. Not that I wasn't intelligent, but truly, what teenager wants to learn how to save? I learned how to save enough to buy that really cute dress or those really nice shoes. And I learned that if I could wait for the sale, I might be able to get both of them. Waiting for the sale is a challenging game. Sometimes you don't win that one, but when you do and you can get both, it's pretty sweet. My grandparents came over from the old country, and I remember them saying, "Why pay someone to do something that I can do myself?" My grandmother was a seamstress and taught all of her daughters to sew. As a child, most of my clothing was handmade. I remember when I started working and could buy my own clothing, and I was so proud of myself. While all of my aunts knew how to sew, I did not get that gene. So I was anxious to be able to start buying my own things. And I was so proud when I bought my first outfit, and I had to show my gran. And she asked me what I paid for it. And when I told her, she said, "I could have made this many of those." She told me how many she could make for what I paid for it at the store. And she wasn't trying to be mean or anything. She was just trying to make me understand the value of $1. So it was a valuable lesson, and I have to admit, obviously, it's one I still remember even today. So let's get started. We're going to start with debt. All right. So if you don't have enough cash to pay the bills, what do you pay first? And which, if anything, can you put off? Obviously, you want to be sure that your needs and the needs of your family are being met. So the priorities would be the necessities, such as food, shelter, including rent or a mortgage, utilities, and prescriptions. If you're a homeowner, you want to be sure to keep up with your property taxes and your homeowner's insurance. You'll need to be sure that you can pay for your transportation. How are you going to get to and from work or doctor's appointments or whatever if you don't have transportation? If you use public transportation, be sure to put enough aside to cover that cost. If you have your own vehicle, it could mean a loan payment or a lease payment. It definitely means insurance, gas, and maintenance, such as oil changes, tires, and any repairs. If you're a parent, you may need to pay child support or daycare expenses. So these would all be considered priorities, okay? If you owe money to the IRS or are behind on student loans, these would be among your priorities. If you're behind on either of these, not just the student loans, but the government student loans, okay? The government can attach your wages up to 25% of your take-home pay. Think about that. If your take-home pay is $1,000 a month, and I think it's easy to work in round figures here. So if your take-home pay is $1,000 a month, 25% of that is $250, which would leave you $750 to pay for the necessities. Many people get overwhelmed with these debts, and they try to ignore them. They think they'll go away, but they don't. That's one of the worst things that you can do. Both the IRS and the student loans are willing to work with you on repayment. Student loans even offer income-based repayment plans, with some people qualifying for a deferment. Another debt you won't be able to ignore is a court judgment. A collector can ask the court to seize certain portions of your property, your wages, and even your bank accounts. And unfortunately, you don't know until you get the notification that it's been done, okay? Last but certainly not least, you want to pay your unsecured debt. A lot of people will pay this first, especially when they're in a financial bind. They figure if they pay their credit cards, at least they've got that little bit of leeway in case something comes up. The reality with unsecured debt is that not paying it can hurt your credit score, but if you keep using it, you're not going to get out of debt, okay? And the thing is, since it's unsecured, no one is repossessing your car or foreclosing on your house. You're not being kicked out of an apartment. And unless there's a judgment from the lender, no one is attaching your wages. If you're struggling with your bills, one of the things to consider is trying to reduce your housing costs. A homeowner will have to pay for home repairs and appliances, but renters typically don't have to cover these expenses. Now, I know they always say it's better to own your own home. You're building equity, and that's a great thought if it works. But if you're in a position where you can't afford to pay for the repairs, then you're not building equity, because if the house is falling into disrepair, you don't have equity. So you even though you may not want to rent, you would definitely want to look into that. Renting, you don't have to worry about appliances, repairs, all of that. That's the responsibility of the landlord. You could try to reduce your transportation costs, depending on where you live. If you live in the city, obviously you have access to buses, public transportation. Depending on where you might live and work, you may have access to the railroad, but public transportation means that you don't incur a loan payment, you don't have to pay for car insurance or repairs, okay? If you are a vehicle owner, shop for your insurance. Don't just take the first offer. It's amazing the difference between one insurance company and another. So definitely consider doing that. If you are to the point where you have collectors calling you, you want to remember to communicate with them calmly. As difficult as it may be, try not to let them get you stressed out. And I know how it can be. I know they can get a little belligerent. They're calling you for a reason, and that's the purpose of their phone call. And when they're done, they want that resolved. Okay, that's their job. But if you let them get you worked up, if you let them get you stressed out, you could end up agreeing to things that you can't afford. And it wouldn't be the first time that somebody agreed to what they're offering just to get out of the phone call, just to get them off their back. Okay, it would be very easy to tell them, sure, you want me to do that? That's fine. Don't do that. Okay, keep calm, try to make the arrangements. If you promise something you can't deliver, they will push harder the next time that you talk to them, and they won't be as willing to negotiate. Your best bet in communicating with them is to put it in writing, okay? For a couple reasons. First of all, you have proof as to what you've offered. It's right there. They can't come back at you and say, well, you said this. No, I didn't. It's right there. I wrote it out. That's what we've agreed upon. Okay. The other thing is, writing gives you the opportunity to go over what you're talking about. Okay. Look it over. Is that really what you want to promise? Is that workable for you? Because if it's not workable for you, you're not going to do it. Okay. And the whole thing with these collectors, if you can communicate with them and really come up with an agreement for both of you, they are willing to work with you. They want their money, but they don't want to fight you every month for it. Okay. So, writing puts it down in paper. You have proof of exactly what was agreed upon. Okay. If they're requesting something you can't comply with, don't hesitate to make a counteroffer. Just be sure that it's something that works for you. Okay. Whatever you do, no matter how aggravating it is, do not agree to pay a low priority debt if it means you can't pay a high priority debt. So if this collection account, if the only reason you're paying it is to get them off your back, but it means you're not going to be able to buy groceries that month, don't do it. You need groceries, okay? Some collectors may offer a settlement. This can benefit you. I mean, it can definitely be a positive for you, but in some respects it can be a negative. Let me explain that. A settlement can save you between 20 and 35% on a debt. That's a nice little chunk of change depending on the size of the debt. If the settlement is saving you less than $600, you're good, okay? Saving you money. If the settlement exceeds $600, then the collecting agency has the right to report that to the IRS as income for you. So you may save that $600, but you'll end up paying taxes on it at the end of the year. Okay, so just something to keep in mind with settlements. I mean, they can definitely benefit you, but just be careful of what they're offering and how it's going to work out for you. Okay. One of the things when you're dealing with a collector, one of the things you don't ever want to do, never send a post-dated check. Post-dated checks are not valid. And it wouldn't be the first time that a creditor requested a post-dated check with the promise that they'll make sure it's held until the date of the check. And for one reason or another, maybe they're out of the office and somebody else decides to put the check through, or maybe they didn't intend to hold the check in the first place. Even with that promise that they will hold it, they may submit the check right away, which can cost you NSF fees. It could mean that another debt that you really needed to pay doesn't get paid because that post-dated check hit the account before the check that you really needed to pay. Okay, but you need to remember, while the creditors want to be paid, if you can offer a reasonable plan for repayment, they will usually accept it. Okay, while it's great to pay off your collection accounts, concentrate on your current bills. If you don't pay your current bills so that you can pay off your collection accounts, you're just creating more collection accounts, which really doesn't make sense. I mean, keep up with what you've got, and if you can throw extra money on the collection accounts, then by all means do it. But don't go past due on something that you're current with to pay off a collection account. It pretty much defeats the purpose, and it's only going to hurt your credit score. FYI, the Fair Debt Collection Practices Act, say that fast, it's a federal law that provides limitations on what debt collectors can do when collecting certain types of debt. This act places limits on the time of day they can call, the language they can use, among other things. So if you feel like you are not being treated fairly, if you feel like they are being disrespectful, check out the FDCPA to see if the situation is covered. All right, and if it is covered, you can report them, and the federal government will step in and make sure that they are handling things the way they are supposed to be. I'm going to go ahead and move on to budgeting. Does anybody have any questions at this point? Okay. All right. Budgeting is one of the best things that you can do for yourself. While some may find it stressful to have a budget, I believe it's more stressful not to have one. Many people spend money without having a plan for their income. These are the people that are caught off guard when there's an emergency. With a budget, you plan where your money will be spent. Your budget should not only include your regular debts like rent, utilities, and loans. You should also budget for groceries, healthcare, car repairs, and yes, even entertainment. Why should you budget for entertainment if you can't pay your bills? Not being able to do something enjoyable from time to time can make life seem unbearable. Budgeting to go for ice cream or a pizza once a month isn't expensive and can give you something to look forward to. It can make it feel like a little less of a drudgery. If you're struggling and you don't have a lot of money for other things, ice cream once a month is not going to be a huge expense. In addition, with your budgeting, you need to budget for an emergency fund. Until you have your emergency fund, there may be times that you need to be flexible with your budget. You may be in the process of building your emergency fund and, you need new tires. So you take the tires out of what you've already saved and then just continue building back up again. The ultimate goal for your emergency fund is to have about 6 months worth of living expenses in the fund. That can seem overwhelming, and I recommend you start small. Start by saving $500, then increase it to $1,000. Gradually build it up until you've reached your goal. If you have an emergency and need to use some of it, use it, but then just continue on building to what your goal is, okay? Some suggestions for savings. There are actually a couple pretty good suggestions. If you have a financial institution that allows you to split your paycheck when it comes in, you can set it up for automated payments to yourself. Set it up that when your direct deposit comes in, a set amount is transferred from your direct deposit to a savings account. If you start with $20 a week, by the end of the year, you will have $1,000 for that emergency fund. Another way to save is to round up your change. Gather and store any change from cash purchases in a jar. Make a deposit when it's full. We had a guy come in here. He had those big water jugs. He had over $600. I mean, he had to roll it in a wagon because it was so heavy. But he saved up his change. $600. That's not too shabby. So there are some apps that round up your debit card purchases as well, and they will automatically transfer the difference into a savings account for you. Another way to save is to tap your cash windfalls. So instead of spending your tax return, set some of it aside to jumpstart your emergency cash fund. The same rule applies to any bonuses or unexpected cash gifts. If you weren't expecting that money in the first place, why not put at least a portion of it into your savings account? Save it for a rainy day. Make a game of it. You're not going to keep up with it if you're not enjoying it. If it's dull, if it's something that you're bored with. I have a friend that saves all of her $1 bills that include her initials in the serial number. So when she gets several stacks, she deposits them. She's gone on vacation with that money, but she makes it a game. It's something she looks forward to. She checks her ones every time she gets them. Basically, anything that you can come up with that you will follow through on. If it doesn't work for you, you won't keep up with it. Once you have your emergency fund, it's time to start saving for your future. Anybody have any questions at this point? Okay, we're going to get into understanding credit a little bit. as a loan officer, it's something that, you know, I look at day in and day out, you know, and we do make recommendations to people as far as ways to get their credit better. I like being able to tell somebody, if you take these steps, you'll have a better credit score, and next time I can give you a better rate. You know, I hate to see people paying more than they need to. So we're going to go over understanding credit a little bit. How you pay your bills can have a huge impact on your income. Some creditors will determine your interest rate on a loan depending on your credit report. The credit union that I work for, we practice something called risk-based lending. So basically what that means is the better your score, the lower your rate. The lower your score, the higher your rate, okay? So here's an example. Let's look at a new car loan, a 60-month term for A-plus paper, okay? I believe I went with a $10,000 loan. So somebody that's A-plus paper that has a really high score, over 750, they can get a rate of 3.74. They would pay about $980 in interest over the entire 60-month term of that loan because the 3.74 is such a low rate. Someone with e-paper, which means their score is 500 or below, for the same 60-month $10,000 car would end up paying $3,119 in interest. That is $2,140 more than the person with the perfect credit. So basically, having a better credit score can put money in your pocket. Why would you want to pay $3,100 if you can pay $980? Okay? And the thing is, poor credit is not something that you have to settle for. There are ways to clean up your credit, and it may take time, but if you're determined, it can be done in a reasonable amount of time. I've seen people that clean things up in as little as 6 to 8 months. We had a member who came in to buy a car loan. His credit was not great, and we basically told him the changes that he needed to make because he shared with us that he was looking to buy a home. And we want to be able to do that. We want to help you to get to the point where you can do the things that you want to do. So we told him what he needed to do, and he was very diligent and did exactly what we told him. And literally 6 months later, he was back in the office telling us that he already had settlement scheduled. And in the next 2 weeks, he was going to be signing papers on a new house. So you can do it. You just need to follow through on the guidelines. You need to follow through on the directions. So how do you build credit? The best way to build credit is to open a secured loan account. Many financial institutions offer secured loans, including secured credit cards. You would need to deposit funds into a savings account, which would then be pledged or put a hold on while the loan is open. This allows the consumer to get a loan whether or not they have credit established or if they have poor credit. And at the same time, this keeps the risk low for the financial institution. Once the consumer has had the loan for 6 to 12 months and established a positive payment history, they can attempt to apply for an unsecured loan. Another possibility for a secured loan would be a vehicle loan, but either of those would work. Whether you have a secured or an unsecured credit card, you will want to be sure not to max it out. Now, what that means is if you have a credit card with $1,000 limit, if you run it right up to that $1,000 limit, you are telling the credit companies that you don't know how to handle that you can't handle the money. You've got to use all of it. okay, we recommend that you not borrow more than half of your limit. So if your limit is 1,000, we recommend that you try to keep your balance below 500. That makes it look like you have 50% or more of your credit limit available. It doesn't look like you're spending everything that you have, okay? Sometimes people will open store cards, and store cards, they make it, they really make it, I don't want to say beneficial, that's not the word I want. They make it easy to do that. Store cards are not the best way to build credit. They are too easy to use, and the incentives that the stores offer make it seem like a great deal you just can't pass up until you look at your bill and realize just how much you've spent. So, you know, as odd as it may sound, the best way that you can build your credit is open that credit card and not use it, or use it very sparingly, okay? While building credit, you want to make your payments on time. A mixed payment can drop your score 50 to 100 points and can take up to 24 months for your credit score to rebound after that one late payment. You also want to refrain from opening too many new accounts within a short period of time. This can make you look desperate. It makes you look like you need money, you're opening all these cards, and for every single time you apply, it can knock 20 points off of your score. So, you know, you don't want to over apply, and you don't want to overspend on the card or cards that you currently have. Another thing, people tend to think that it's easier to get a loan through a finance company. I can tell you from experience that it is not. I worked for a finance company years ago, and their credit guidelines were not really any different than ours. They aren't really any less strict. The rates are crazy, I can tell you that. When I worked for the finance company, rates on the unsecured credit were 23 to 27%. That's insane. Our installment loans here at the credit union range from 7.99 to 16.99. So even our high end is not as high as their low end. Not only are their rates crazy and their qualifications no less strict, but having too many loans with a finance company can drop your credit score. So the best way to establish good credit is to make your payments on time and to not apply for a lot of loans. Another concern while building your credit is identity theft. The Fair Credit Reporting Act gives you the right to request a free copy of your credit report from each of the credit bureau agencies once every 12 months. So they would be Experian, Equifax, and TransUnion. The reason they recommend getting the report from each of them is that not all of the financial institutions, not all of the collection agencies report to each of them. I actually had a member that I did a loan for. They were a brand new member and they were from out of the area. And since they were so new and their credit was a little bit iffy, I pulled TransUnion and Experian and ended up looking at two completely different credit reports because part of their loans reported on the one and part on the other. So, and the thing is, had I not done that, I wouldn't have had a good picture of them financially. Okay, so you do want to check all three credit reporting agencies. Again, it is free to do that once a month, and I did provide information for you, so they do have that information if you're interested in doing that. When you review your credit report, you want to check everything, okay? Be sure your name is spelled correctly. check to make sure that your name is the only one on there. I've seen credit reports with another person's name on it. As odd as that may sound, there is actually a reasonable explanation. If somebody applied for something and maybe they put a wrong social security number in or whatever, that's why it could show on yours, okay? But still, you want to check that because you want to make sure that everything on your credit report is correct. So check your name, make sure it's spelled correctly, make sure yours is the only name on there. Check your address. Typically on a credit report, you will see not only your current address, but you will see the last 3 or 4 addresses, depending on how frequently you move. So make sure you check your address and make sure that all of the addresses that are showing for you are correct. Verify your social security number and look at all of the accounts listed. Make sure that all of those accounts that are on there truly were your account. If any of the information is incorrect, you will want to contact that credit bureau agency. Now, let me just mention to you that contacting one of them does not fix it on all of them, okay? So if you have a problem with Experian and you have a problem with Equifax, you have to contact both. You can't just figure that contacting one of them is going to take care of it, okay? And it does not cost anything to file a dispute. So you want to contact the agency to make sure you get the information corrected. You may need to file a dispute, but it's definitely worth doing because if there are things on your credit report that aren't yours, and especially if they're derogatory, that's affecting your credit score and that's affecting the rates that you're paying, okay? As I stated, I did send some information over to help you out. Included in that information is a money management planner. This gives you a more detailed, it's very detailed, and it gives you more information about budgeting, planning. It asks you about your goals and breaking down your net worth and your expenses. It really is a great tool. And I really like the way it gets right down to the nitty gritty. The first time I looked at it, I was surprised at all of the items listed because, you know, you think of a budget and you think, okay, I have my utilities, I have this credit card, I have my car payment, but you don't think I have groceries, I have gasoline, I have the haircut every 6 or 8 weeks, I don't know. You know, there's so many things that you don't consider as part of your budget that truly are. So this money management planner, it lists everything. But definitely, you know, take a look at that. It's so easy to work on a budget and forget things. Union dues, maybe you pay those quarterly. Is that part of a monthly budget? Actually, it is, you know, because whether you pay it quarterly or whether you pay it monthly, it's still part of your budget, okay? Sometimes I think that we need a tool like this to remind us where all of our hard-earned money goes, because I think it's so easy when you're out shopping or whatever to buy something and not really think twice about it. You know, I know myself, maybe I'll have $5 in my wallet and I'll look in to get something and think, where did that $3 get to? What did I do with that? You know, and then I have to really start thinking about it. So, you know, it's good to be able to look down something like that that will give you little reminders and say, well, what about this? Do you use this? What about that? So I know that I've given you a lot of things to think about. Hopefully it helps you to get in a better position. Does anybody have any questions? Okay.
Hi, ask away if there's anything maybe your clients asked or anything that you've ever been wondering or something that's maybe come up as you've talked. Now is the time. Don't be silent.
I just wanted to speak about the derogatory marks that could be on your credit.
Okay.
I actually went through that process. There was a couple derogatory remarks on my credit, and submitted the claims to have them removed. It took a little bit of time, but it was well worth it because they were settled and removed from my credit. Thank you for speaking about that.
Sure, no problem. I did want to say as well, I know sometimes people hesitate to bring things up. They don't want other people, you know, knowing what their issues are or whatever. So, you know, if you have questions and you would prefer to be discreet about it, please don't hesitate to reach out to me. I can give you my email. I believe Erika has it. Or you can give me a call at the office. That would be fine as well. But I know sometimes, you know, you sit there and it's like, I don't really want to talk about this with all these other people around. So, okay.
I have a question. What advice would you give to someone that's currently a student still, but anticipating having to pay off some student loans in the near future?
Well, first of all, if you're currently a student, it's my understanding that you don't need to start paying those until you've been out of school for 6 months.
Yeah, that's my understanding as well.
Okay, so my suggestion to you, I don't know how soon you're going to be out of school. Have you done any job hunting or?
I'm about a year out, a year and a half from graduating.
Okay, so once you get closer, I mean, at this point, I wouldn't be really concerned about it. Once you get closer, you'll want to find out, like, how are you going to get a job right away? How long is that going to take? The one thing I would definitely recommend to you is do not hesitate to get in touch with FIA if you are having financial issues. They are very good about, you know, helping people out. They do have several programs. I mean, I know I've seen people that are on income-based payments. I've seen people that have had their payments deferred because of their income. So, you know, my suggestion to you would be, if you're struggling within that 6 months after graduating, reach out to them right away. Don't wait until your loan goes to default, because that just hurts your credit.
Gotcha.
Okay. Now there are different companies that you can talk to. First of all, I do recommend FIA, and I believe that FIA can refer you. I know there's a place called SoFi that I believe consolidates student loans, but that, you know, that's just one of them. There are other places as well. Your best bet would be to reach out to FIA.
Okay, thank you.
Okay.
It's on the radar.
Thank you. Thanks for the question.
And I don't really have a question, but I just wanted to thank you for the information on the store cards.
Oh, you're welcome.
I suggest to my clients not to open the store cards as much, especially because a lot of them are lower income.
Right.
They're typically easier to get for them versus an actual credit card. So I just wanted to thank you to reaffirm that information.
Oh, you're welcome. You know, the thing is, if they can find a financial institution, and I did send some paperwork over. I know as far as the credit union goes, we do offer a share secured visa. Okay. We've had members that have started with a balance as low as $300. And what I will tell them is, you know, if you want a higher limit, we can start you with the 300, and, you know, say you put an extra 200 in the account, call me and let me know. We'll bump up your limit, put the pledge on the remaining 200, so then you have a $500 card. So if you find a financial institution that is willing to work with you on that, there are ways for you to build your credit without using store cards. And, you know, I don't want to bash store cards because I don't think that they're awful, but my concern with a store card is, like I said, they are so easy to use. And they send out these offers. Well, you can get so much off, but you have to use your store card. And then they don't tell you that in a lot of cases, you can turn around and pay that bill right there at the register. So, here you are, say you bought, I don't know, say you bought a pair of jeans, okay? Put it on your store card. Your very next transaction at that register can be, oh, hey, by the way, I need to pay on my bill. And you can pay on your bill what you just spent on those jeans and never be charged interest because you've paid it right away.
Yeah, I have a Kohl's card and they're real easy to send out those coupons and so much off. So it's real easy to spend that money.
Well, and at one point I worked at Kohl's, so I know exactly what you're talking about. And that when I'm telling you that you can turn around and pay that right there at the register, you can. If when you go to Kohl's, if you buy something and then make your payment right then and there, then you don't get charged interest on it.
That's nice to know.
Yeah. Yeah. Now, I don't know if all store cards work that way, but it's worth checking. It's so that you know what you can do with them.
And I see a question.
Yeah, I had a question around just like for savings, like the best way to go about that.
Okay.
I know for me, having a savings account and a checkings in the same bank, you can get tempted to dip into that savings. So, what's some other options, or as far as like savings accounts or savings funds that you put money away and that can accrue over time, if that's a thing? That was just something that was rolling around in my head.
Well, there are different types of accounts. I mean, what we offer a savings account, we offer a checking account. Christmas vacation, we do offer a money market, and we offer certificates. Now, if you're talking about trying to build up a savings account and maybe having a savings account that you can't get into as easily, my suggestion would be the money market. It does require a minimum balance of $500, but there are stipulations as to how many times during the month you can take money out, stipulations as far as the minimum amount that you can take out. You can't nickel and dime that account. You can't go in and say, oh, I think I need $20 today, because it's not happening, but to some degree, you're going to have the control over that account. So you need to, like, in your head, you need to say, okay, this is my money market, I can't touch it. Do you know what I mean?
Gotcha. Yeah, that makes sense.
And then, does anybody in here know, Craig just asked if anybody knew like Boscov's or maybe a list of stores. Does anybody have like a list of what, like those stores where you can maybe pay those balances, or is that something that people would have to find out from their individual creditor?
I think that they would need to ask the individual store. I think Boscov's is one that you can pay it and won't be charged, but I don't know. So, and a lot of them will say, like, when you get your bill, it'll say, pay this amount by this due date, and if you do, then there's no interest.
Yeah.
Okay. But it's going to vary from one store to the next.
How about on the money market accounts? What's the gain as far as interest on the money being?
I'm sorry, you cut off at the end. You said, what's the gain on the interest as far as the money?
Market account, a money market account. Do you get interest on the money you save or keep in there?
Oh yeah.
Isn't there interest? And
Yes,
okay, so what money market accounts yields the best interest as far as to be saving money in versus uh, what do you call that? Like Belco or Members First?
you know what? You would need to check the different financial institutions. They all structure their money markets differently. With ours, our minimum deposit is 500.
Hmm.
If you go below that 500 and stay below that 500 for 60 days, then we close the money market and put your money in your regular savings account. Okay. But you know, ours is tiered. The first $9,999.99 earns a specific interest rate, and then you bump up to the next tier, which is 10,000 up to 49,999.99, and then from 50,000 and up is another tier. So every financial institution structures them differently, and their rates are determined by their board of directors. So you unfortunately, I can't really say to you whose is the best.
Okay, so as far as a money market account, what if you just putting money in and you're not touching it and it just continues? Uh, so do you have to get up to that 9,900 or what have you, or what is the interest rates when you first start one off with $500?
Okay, so I believe with us currently, interest rate on the 500 would be 0.2%.
Okay.
Okay, and then once you get up past at 10,000 or above, then the rate automatically adjusts. You don't have to say to us, hey, by the way, I hit that 10,000. The system is programmed so that when you reach that 10,000, the rate just automatically adjusts up. Okay, and then when you go over 50,000, then the rate would adjust up again. Does that make sense?
Yeah, and it doesn't fluctuate with the market and anything like that.
Typically, the rate is what it is. I mean, they did, the board just reviewed it after the whole pandemic, and with the way the market and everything has been, they have adjusted the rates down a little bit. So I won't say that the rates can't ever be adjusted, but no, they are not, they aren't adjustable in that you're not looking for them to adjust every month or every 6 months or every, do you know what I mean?
Yeah, I kind of understand what you mean.
So, yeah. Any other questions?
Just a clarifying question
Okay.
about the savings account earlier that you mentioned about the money market. I think you were saying something around like you have control of the account, but there's a minimum on a monthly basis in which you can take money from that, or is that a yearly basis? I forgot exactly what you said.
No, the minimums are monthly. Okay. I believe I want to say you're permitted 5 withdrawals in a month. And I believe your minimum withdrawal is 300. Okay. So if you needed to get into that account, you know, you're not going to be stuck not being able to get into it. But they do put the limits on it so that you try to save more money. Okay.
Got it. Mm-hmm.
And then it's a monthly thing.
Right.
So, because they're not going to tell you that you have 5 withdrawals permitted for the whole year. Do you know what I mean?
Yeah.
So,
thank you.
You're welcome. Anybody else?
This was very informative. Thank you for doing this for us.
Oh, you're welcome. Thank you so much. I appreciate your inviting me.
Yes, thank you.
So I have another question. So you guys also do loans, you said?
Yes, we do.
All right. So a person, decent credit, he starts a money market and decides he wants to get a loan from you. Can he get that loan and just deposit it in the money market and just?
I would not recommend that simply because the loan rate will probably end up being higher than the money market
The
rate.
interest rates, okay.
Right, yeah.
Got-
That, to me, that wouldn't, it wouldn't make sense for you to pay money to earn money. Do you know what I mean? Okay. So do we have any more questions?
Sorry, I had to unmute myself. I've got, these will all be going into your inboxes. Blue Chip sent over some really great resources.
Cool.
So I will get them in everybody's inboxes today. We've also got some, I emailed some forms and things that were virtual that would also be good to share with your clients. So yeah, just thank you again so much, Tony and Teresa, for setting this. Thank you everyone for attending. This was really informative and yeah, it was great.
Oh, you're welcome, Erika. Thank you for inviting us. I did mention that if anybody has questions that, you know, they didn't really want to ask in front of everybody else, you do have my email address and you have our phone number. So please don't hesitate if there's somebody that has a question to, you know, pass that along.
I have a question. For the like the tips on improving the credit, about not getting stored credit cards and secured the credit card. Is that something like, do you guys have like a tips on a website or something?
Actually, I had provided Erika with a little cheat sheet improving your credit score. So there is information on there.
But I mean, is it available online? Not nothing physical, I mean online, not physically.
I'll be honest with you, I don't know if it's online because I don't look for it there.
Okay, yeah, I'm not a paper person, but I like to share stuff, but I can't share physically something. If I don't have it in, no, I just, here's a link, look at this, read through it.
Right. Well, I do believe that may be something that I emailed to Erika. So if she wanted to forward that email to you, I think she has that capability.
Okay. Yeah, I will send that out again. I sent it out, so it may have gotten buried. So I'll send it again with like an important flag, so that way you can go back and look for it.
Avita, we also have a blog on our website that you can check out that has great tips on budgeting. It has tips on credit. We also sent some stuff to Erika that was a sheet that has online resources that will take you directly to those links.
Great.
Yeah, so that's available too.
All my clients were busy, so I wanted to get this information to them as well.
Great.
Okay, thank you.
All right, so if you all are good, we are good, and I will make sure to forward that out with an important flag, and we will let everybody get back to their day. Thank you again for taking this time out, and yeah, thanks a lot. This was very informative.
Oh, you're welcome. Thank you.
Thank you. Bye, everyone. Thank you so much.
Thank you.
Thank you.
Good.